right, so let's look at your checklist for buying a house. A house, of course, is a very important asset. Is there anyone here who is looking to buy a house? Um, you're looking to buy a house in the near future. All right. Well, you might know someone who will be buying, or you will have a reflection of what happened when you bought yours. So, sharing screen with you. Creditor life or traditional life insurance. We have Mr. Heaven who will take you through the comparison, but just to give a little bit of um, overview for you. Yes, the house is a very important asset that and a major purchase in your life, right? I know some persons might be getting onto their second home. You're, you might not have bought the dream home. You're going on to the second purchase, but we'll let you know about the checklist in the steps to buying a house and getting that mortgage. It's possible that you never ever thought about one aspect that we're going to be talking about tonight and allow you to ask questions. So, what do? You say you're going to be buying a house, you have the deposit ready, right? Some persons locate the property at first. Some persons locate the property and don't have a deposit. But it's best to have the deposit ready, then locate the property. You make an offer, right? Just in a simple way. Just putting it simple. And yes, there is acceptance. And there is a presentation of the undertaking by the bank or to the bank, from the real estate company to the bank to you. And of course, you are thinking about just getting the property, right? There's application for the NHT entitlement and co-sharing and so on. There's a life insurance element now, the life insurance request for the amount over and above the NHT portion. That's the step that most persons never thought about. So it's not only for purchasing a house, but when you want a loan or you're buying a car, an expensive car, the life insurance component is often forgotten. And you might be still thinking, how does that come in? No life insurance, no mortgage. So tonight we want to look at what are the types of life insurance available for you when you're purchasing your home. Yes, there's Creditor Life, or it's not off, or traditional life insurance. We're going to be looking at them. What to expect, right? There's the life insurance explained and the definition of the two types of life insurance available and why distinguish between them both. So I'm going to be asked, what are the advantages and disadvantages? I'm going to ask you to have your questions ready. What should you do now if you have not yet purchased your home? I'm going to be asking Miss White, Lorian White, to introduce for me Mr. Oral Heaven so that we can learn a little bit more about this topic and unravel it. Ms. White, you can go ahead and introduce Mr. Heaven. Mr. Heaven, are you here? Yes.
Good evening. Good evening, Ms.
Evening,
Smith. How are
sir.
you?
All right, Ms. White, go ahead and introduce him.
Yes, so the speaker for this evening is Mr. Oral Heaven. He's a financial advisor at Sagicor. He's well informed, so he will be guiding us through everything we need to know. He's the first VP of the Montego Bay Chamber of Commerce, and we are happy and delighted that he's here this evening to share with us. So we will listen attentively. Good evening, Mr. Heaven.
Good evening. Thank you very much.
You're welcome.
Okay, yes.
For our topic, we'll be looking at is creditor life insurance versus traditional insurance. Now, insurance on a whole, the general purpose of insurance is to provide peace of mind. If something unexpected happens, that is relieving your loved ones of the burden of debt. Now, creditor life insurance is any insurance offered through a bank and is designed to pay off the balance of a loan or mortgage in the event of the borrower's death. Now, if the borrower or the mortgage dies, of course, then they won't call on the beneficiaries to pay. The creditor life will cover that. Traditional insurance plan, on the other hand, provide multiple benefits like risk cover, fixed income return, safety and tax benefit. Traditional insurance policy plans provide a sum assured and a guaranteed or vested lump sum at maturity or at the death of the insured. That's the difference with creditor life. You see, when you're borrowing money, as Mrs. Matthew Smith said earlier, from a financial institution for a project, to buy a house or even a car, to do something to advance the lifestyle of the family or yourself, the financial institution will 99% of the time ask you to purchase creditor life insurance. Sometimes the first person hearing about it, they ask, what is that? What is creditor life insurance?
Right.
Now, you do not want to leave your family with debts. So you would want to ensure that your passing does not become a burden to the family. So creditor life insurance protects your lender, the financial institution, and also protects your family, because if you should die suddenly, then your lender will receive the benefits from the policy, not your family. The lender will receive it.
Yeah.
It can be said that creditor life insurance is flexible. Benefits from claims are used to pay off the debt with the bank or with the mortgage company. Point to note that is that with creditor life insurance, the value of your mortgage coverage is relative to the amount remaining on the loan or the mortgage. So as you pay down your debt, the amount of your coverage reduces with that. If you start off $10 million, you get a creditor life for $10 million, and you pay on the loan to $5 million. Despite the sum, the agreed sum is still the same that you agreed to at day one. If you should die, then the $5 million is not $10 million will be paid to the financial institution and they cover the loan for $5 and give your family $5. No, what will be paid is just the $5 million, whatever the balance on the loan is. So you see, the benefit of creditor life, yes, the family will have the burden of paying off that debt, but your family will not get anything from a creditor life. Only financial institution will be covered. On the other hand, a traditional life insurance, we can't say whole life insurance or term life insurance, but a traditional life insurance provides the policyholder with a guaranteed amount to be passed on to the beneficiaries, be the beneficiary, the financial institution, or family members, regardless of how long they live, provided the contract is maintained. You pay your premiums and you maintain the contract between yourself and the insurance company. Now, the value of your life insurance remains the same throughout the term of your policy, or to life if it's a whole life policy. So there's no reduction in the balance. Everything is covered. If you change lenders, that's very important. If you change lenders or sell and buy a new home, the creditor life insurance policy is terminated because this cannot be transferred from one financial institution to another. You will have to apply for a new mortgage insurance or a new creditor life insurance. If, however, you assign a traditional insurance to your bank or to your mortgage company, and you decide to change, whether this is a second or third home or buy a new car, but you want to have Creditor Life, the lender or the mortgage company you cannot transfer the Creditor Life. You will, however, be able to reassign a traditional life insurance to the new company without issue. So what we're saying here, the Creditor Life is for the lender, for the financial institution. On the other hand, the traditional life insurance is for you. It stays with you, regardless of where you move, because it is attached to you, not your loans and not your debts. So depending on your purpose, what you really want to do, what you want to accomplish, you have to think, is Creditor Life Insurance for me? Or should I move to a traditional insurance to assign to this financial institution? So when I pay off my loan, I get back my policy contract, my family members will still have that 10, 20, or $30 million coverage, because I know settle my mortgage or my loan balance with the bank. So I know how my insurance for my family to benefit from. So it gives more protection from a traditional insurance, from my perspective, than a Creditor Life. You cannot, for the Creditor Life, some Creditor Life is more expensive than the traditional insurance. So, and then you pay all this premium over time. And at the end of it, there's nothing really to show, because the loan finished, Creditor Life done, insurance done. Traditional insurance, on the other hand, the loan finished, you get back your policy contract, you still have your coverage. So should you consider buying Creditor Life insurance coverage? As I said, the main benefit of the Creditor Life insurance is that it will pay off your debt when you pass away. But if you don't buy it and assign what I, from my perspective, from my understanding, is a better coverage, assign a traditional insurance, then you still have coverage for your loans or your mortgage. If you should pass on, then you will still, the insurance will still pay out the loan, and the balance is paid to your loved ones. So you see, you really can't lose there. It's really a benefit for you, a strong benefit. So in a nutshell, that's exactly what is Creditor Life Insurance and traditional life insurance. And based on my small discussion, a little discussion here with you this evening, you'd realize that my leaning, of course, is towards traditional life insurance, not Creditor Life. I'm going to open for questions. I'll show you some questions.
Thank you so much, Mr. Heaven. Who are the vendors of each of those two plans? Who sells traditional and who sells Creditor Life? Can I get them in one place?
No, Creditor Life is sold by the financial institution, the mortgage company, the bank from which you are getting the loan. And of course, the traditional life insurance is sold by the insurance company. You'll get it from your financial advisor. If you talk to your financial advisor too, depending on the situation, they'll recommend what is necessary for you. Traditional insurance or Creditor Life insurance, depending on your need. And you mentioned earlier the client asking for the contract. There's no contract for Creditor Life insurance. You get a contract for a traditional insurance, and that contract, of course, if you're going to use it for mortgage, you'll assign it give it to the financial institution. The Creditor Life is a part of the mortgage. And sometimes too, what the financial institutions do is upload or front load the premium and add the premium to the mortgage, or you're paying interest to on your premium for the life of the loan. That's not an advantage, it's a disadvantage. It's an advantage to you if you're unable to find the premium, but to me it's a disadvantage because paying interest on your premium, and at the end of that period, there's nothing to show for it, and that's the reality.
Okay, so I will just explain that to them in terms of a practical example. When I applied for my mortgage, with the knowledge I have about Creditor Life and traditional, when told what the mortgage was, I asked the mortgage officer, how much of that I think 58,000 it was at the time. How much of that is for insurance? And he said $5,000. And I said, well, please carve that out. I already have insurance. My traditional life insurance will be applied. I said to him, you should have asked me for that. I will send it to you. And so the mortgage monthly was reduced by the $5,000. So that's what he was just saying to you, that you would have been quoted a figure for your mortgage, which could have been reduced if you had the traditional life insurance. Think about it. Did you have the traditional life insurance and were not told that you could apply to your mortgage? Or did you opt to go Creditor Life because of the speed? Explain now, Mr. Heaven, the whole speed of implementing each, why it is that most persons would choose one over the other, and why you should be careful not to choose the wrong thing, right?
And for convenience, some persons would want to choose the Creditor Life, because right here with your business bank or your lender said it's easy. I think it's easy. It's 1-2, and it's done because you can sign right there. You pay the premium. You start paying the premium, but you're going to pay interest on, and yeah, you get your Creditor Life. But once you have knowledge of what a Creditor Life is and how it operates, and if you're a business person who's thinking about family and thinking about family security and wealth creation, you're not going to want to sign a Creditor Life. The speed, people think that it's going to take a long time for you to get your traditional insurance to assign to a mortgage or to a loan. It's not really, because the insurance company put priority on policies that will be assigned to mortgages. So once it's a policy that is said, and it's a mortgage policy, there's priority. Also, there's a letter that can be issued to the client to say you are doing a mortgage policy or traditional insurance with insurance company, which would be assigned to the mortgage, and they'll await that. I would tell a large percentage of the time, you get the contract before that mortgage is approved, because mortgage is not overnight. You know, the mortgages have to go up for approval. After approval, then the transfer of title, stamping of title, all those things. So a number of times you'll get your policy contract in hand to take to the financial institution before the mortgage is approved. So there's no rush really. Take your time, go through, ensure you understand exactly what you're getting into, and ask the lender, is it more beneficial for me to assign my traditional insurance, or should I go with Creditor Life? If the lender is thinking about you, the client, they'll tell you what is best for you.
Okay, is there a waiting period for the Creditor Life to be effective? And is there a waiting period on the traditional?
The traditional life insurance is for me, what my understanding is immediate. Once you go through you go through the medical and do what is required, then once you sign and pay that premium, then it's in effect. For the Creditor Life requires no health plan, no medical.
No medical, so there's 6 months waiting. Okay.
Right. So because also there's a situation too where the insured or the borrower dies within the 6 months, then the chances are, or even sometime after the 6 months, the investigation show that there was some condition, even though the Creditor Life doesn't require a medical, but there are some conditions that were, because there are some questions that you were asked, with the Creditor Life, and if you answer one of those questions incorrectly or lie or tell or it is not true, as a matter of the response you give as related to that question that is asked, and the insured dies, then what happens? the lender will not settle the mortgage or the loan. They will call on the estate of the borrower to settle that loan, because it's not pure, because you have said that the terms and conditions, because of the answer that you gave, it would null and void the terms and conditions of the Creditor Life.
Wow, I thank you for that. That's a really good synopsis of what the Creditor Life is. So be smart, guys. You have been educated and you know that there are two different types of plans, two different, there's advantage and disadvantages here